Good evening and Happy New Year. With the financial markets closed for the holiday, we thought this would be a good a time as any to take stock of the investment scene as 1991 begins. To do that, we'll be talking with some of the leading experts on the economy, banking, and real estate, and the foreign markets. And we'll poll our market monitors for their opinions as to where stock prices are headed. But before we look ahead, let's look back at where stocks went in 1990. This chart of the Dow Jones Industrial Average indicates after a rough January, the blue chips resumed their upward course, coming within a hair of 3,000 in mid-July. But with the invasion of Kuwait on August 2nd, the bottom fell out, and it was almost straight downhill for nearly 665 points until a slight rebound at year-end. To fill us in on the vital market statistics of 1990, Bill Lefebvre of Advest joins us from New York. Bill, we've just seen the Dow's performance over the past year. Was it pretty much as rocky for the other market averages?
Oh, certainly. As you can see on this board here, the Dow and the S&P were down maybe single digits, but look at the Amex and the NASDAQ, 3 times as worse. But bad as these numbers look, they're much better than they were in October when the world was still reacting to the Kuwait invasion. The Dow, for instance, is up 268 points, or 11% from its 2365 low for the year. Now, in the area of the Dow itself, the 3 best were Philip Morris, Procter & Gamble, and Coca-Cola. Now, they're all consumer growth stocks, and that probably was the best place to be in 1990. As for the worst, Goodyear lost money in 1990 on restructuring, environmental cleanup charges, and narrowed profit margins. Navistar's 1990 loss reflects lower sales from weak demand for medium and heavy trucks, and American Express has been impacted by the problems at its brokerage subsidiary, Shearson Lehman Brothers. Now, and the best and worst for the overall on the big board, Cabletron Systems develops high-performance specialized hardware and software for local area networks. Earnings per share in the first half of the current fiscal year are up 37% on 62% higher sales. U.S. Surgical Corp also had a nice gain. Amdura, a hardware and auto products distributor, filed for bankruptcy in December, as did Prime Motor in September. Now, the best and the worst on the Amex, OEA, among other things, is the leading maker of airbag initiators for autos. Thermal Cardio Systems is seeking an FDA okay for a battery-powered HeartMate device. Price Communications has radio and TV stations and newspapers, all experiencing lower revenues currently, hence the absence of earnings and its low stock price. Banyan Corp, formerly known as the Fur Vault, has seen its losses riding sharply on a 38% sales decline, probably due to the campaign against women wearing fur coats. Over on the NASDAQ, Lifeline makes personal emergency response systems and recently returned to a profit on 38% higher sales. Cabot Medical Corp focuses on providing least invasive systems for surgical and diagnostic products. They're also big in cryomedics products. Phoenix Medical Technology is in default on some of its bank loans, and Silk Greenhouse, which operates a chain of warehouse-style stores, filed for bankruptcy in November. And that's how it was in 1990, Frank.
Thank you, Bill. Changing direction for a moment and looking ahead now, we noted that last January was a very rough month for the Dow. Do you think history will repeat itself, especially with that January 15th deadline for Iraq approaching quickly?
Well, I think the key is that January 15th date you mentioned. You know, remember the book War and Peace? Well, now I think it's War or Peace. And I think that's going to stem that early, reinvestment demand that we normally get in the first week of January. It may temper it a bit.
Would investors be well advised to take advantage of a dip should hostilities break out?
If you had a shooting war, you probably get a couple 100-point shot on the downside on the Dow in a day or so. Now, if that happened, unless there was something outrageous going on elsewhere, I would be a buyer of stocks. I'd even use margin.
What about the recessionary outlook, Bill?
Well, you know, I think this is a financial type thing, financial real estate banks, as opposed to an industrial one. I think it's going to be shorter than many people think, and I think by the middle of the summer, you're going to see higher earnings and we'll be out of the woods.
Bill Lefebvre at Advest, thank you very much, Bill, and Happy New Year to you.
Thanks for having me.
1990 wasn't just a seesaw year for the stock market, it was that kind of a year for the economy in general. In January, weather-related increases in food and fuel prices raised the prospect of runaway inflation, causing interest rates to head upward. By April, unemployment was also rising, and the administration was warning of a credit crunch brought about by overzealous bank regulators. In June, President Bush was so alarmed that he even agreed to accept new taxes in an effort to get the Fed to ease up on interest rates. But the Fed held out for a budget agreement between the White House and Congress, which didn't come until October. In the meantime, Iraq's invasion of Kuwait sent oil prices soaring from $14 a barrel to more than $40 a barrel. With war in the Middle East a real possibility, consumer confidence plummeted, and many economists declared a recession to be underway. What does 1991 hold in store for the economy? Paul Kangas talked with two leading forecasters for some answers.
Joining me from New York is Lawrence Kudlow, the Senior Managing Director and Chief Economist for the Bear Stearns Brokerage. While coming in from Atlanta is Donald Radicek, the Director of Economic Forecasting at the Georgia State University. Gentlemen, welcome. And first of all, are you both of the opinion that a recession has indeed arrived? And if so, is it likely to be a mild one or a severe one in this coming year of 91? Larry, start with you.
Well, I think the recession has arrived, and my own judgment is it started in July. The business cycle peak was in June. And one of the interesting things about this recession is it appears that businesses may have discounted it or anticipated it in advance, which is very unusual. And it seems to me that production and employment have been cut so much, really under sales, which is also quite atypical, that this could turn out to be a fairly short recession. My guess is 70 or 80% of this recession is going to be over through the fourth quarter.
Donald Radicek, how do you agree with that?
Well, I think most of that is correct. The one area we're worried about is, of course, whether or not capital spending will now start to cave in. Current positions show that the capital spending may be unchanged in 1991, but given the uncertainties that exist right now, we could see a 3 or 4 or 5% decline in capital spending, and then under those circumstances, we'd see a somewhat longer downturn.
As we've noted earlier in the program, the Federal Reserve has been extremely slow in the year of 1990 to lower interest rates, apparently because it continued to fear inflation more than recession. Do you think that they're going to reverse that whole logic right now? Larry, go ahead.
Well, I hope not. I think the Fed has done an excellent job basically following market price indicators such as bonds and gold and commodities and trying to let the market tell them when more money is necessary. And I think the Fed ought to just continue to follow the market in 1991. You know, they have an excellent opportunity to really permanently reduce the inflation rate and make enormous progress toward lower interest rates in 1991 and 1992. And I do not want them to reinflate the money supply or engage in any GNP fine-tuning or pump priming. I think that would be a mistake. Keep their eye on gold. That's been the key indicator.
Don, some are actually talking about deflation in the year ahead. What do you think on that issue?
Well, I think there's no question we're getting spotty deflation. In some of the industrial commodities, you're seeing prices starting to crack on almost all the metals and a fair amount of the other industrial materials. The chemicals apparently are peaking out, the plastics, and a lot of the other items are showing some price weakness. Now, when we get to the final user, there aren't that many price declines, but we are seeing some there as well. Household furnishings are declining, and we may be seeing some moderation in automobile pricing, although the imports raised their prices just the other day.
Let's look right now to the situation in the Mideast. When it comes to corporate planning, I mean, this is trying to plan a Caribbean cruise with a hurricane warning in the forecast. Isn't this going to worsen the recession as long as the standoff, the stalemate continues, Larry?
I don't think so, Paul. My own judgment is oil prices have no place to go but downward, and there may be some kind of little 20-minute spike in the event of a war, but I have no concerns. Frankly, the United States is defending Saudi Arabia and the oil field, and I do not anticipate any supply disruption. More importantly, production and lifting rates have been expanded so much, and there's so much oil floating on the high seas, and the demand for energy is going to come way down in 1991 as all the Western economies are sluggish. So I think oil prices are going to drop down $15 to $20 a barrel, and that, by the way, is going to be a stimulant to the 91 economy.
All right.